With me right now is Gautam Chhaochharia, Executive Director and Head of India Midcap Research at UBS Securities. Gautam, thanks very much for your time. Great to have you with us here. You put out a note a couple of days back, Gautam. You're essentially saying that a lot of hope has pushed the market up by 10% plus. But don't get too carried away. I mean, it's just still hope. And given the track record of non-delivery, raising the bar of hope too high only means disappointment. Let's start with that, Gautam.
Yeah, I think that's a basic premise, and this hope we have seen over last couple of years. Every 3-4 months, this hope's come back, and primarily because of market expecting government to do measures to revive the economy. But what we've seen over last 2 years is that all these measures which we talk about have been communicated by the different people in the government, planning commission, economic advisors, the finance minister, or even the prime minister himself. But it has not been done over last year and a half. And the primary reason for that has been political support and political backing, not just from allies and in our view, but also possibly from political leadership of the current government itself. So that still remains an issue. That has not really changed over last month. And that's where our disconnect is, that this hope which has led the market to go up, we haven't seen any ingredient to believe that this hope is becoming a reality anytime soon. Even though the window of opportunity for the government looks like next 6 to 9 months, but even that has been fairly well known. The other point to highlight here is that the finance ministry itself, where the hope has been driven by the prime minister taking over the finance ministry. But if you look at the finance ministry linked measures expected by the government, that's actually only GAR and retrospective tax issues, on which again 2 things. One, we are already seeing some step back from the government in terms of not being too rigid. And secondly, these are at best sentiment issues. They do not really play a big part in reviving economy by themselves. So a lot of the other measures which are still pending, we'll look at FDI in retail, GST, coal, mining issues, approvals, reforms, those still remain. That hasn't really changed.
I got it. How much would you attribute this current, sense of hope, not just about reforms, but that the market is reviving and it's coming back, etc., to factors which essentially are out of the control of policymakers? I mean, oil has come off a long way. Gold imports are expected to continue to drop from here on. And, there's a general sense of wariness about bad news, that, there's a sense that, well, we've seen the worst. How much would you attribute the mood in the market to some of these factors, and not just hope about, Dr. Singh's government delivering on a lot of key reforms?
No, that always plays a big part. And apart from that, India in the short term always remains exposed to global risk on, risk off. So when India has gone up 10%, regional global markets have already gone up 6% also. So, and India to some extent is much more leveraged to global risk sentiment, and therefore tends to move much bigger ways on both sides, at least given the current structure of the economy and markets in terms of high current account deficits. So that definitely is the case also. In terms of markets being wary, again, I think wary is one part. Second part is earnings and valuations, so which kind of is supportive at around 4,700, 4,800 Nifty levels. So that's the level where you see a lot more investors taking that kind of view that, okay, the worst may be behind us. And to some extent that might hold true from a 1 to 2 year perspective. But again, at 5,300 Nifty levels, that argument becomes not necessarily attractive in terms of risk reward. That argument might open you to risks from downside potential, because at these levels, again, valuations are no longer as attractive as they were, say, a month back.
Gautam, we are in the midst of the earnings season. What do you make of it? I mean, is it largely going to be similar to what we saw in the March-ended quarter, or there are important differences which will, lead to, maybe, who knows, more downgrades? Maybe not big downgrades, but more downgrades.
Yeah, so March quarter was actually quite okay, and in fact, if you go to the minute details, at the margin it was a positive surprise in terms of more number of companies beating estimates. But the June quarter, if I look at the estimates for Nifty, for example, our estimates are about 10-12% growth in earnings for the first quarter. But interestingly, if you strip out the oil and gas and global commodities, and you look just the local exposed sectors, which is primarily autos, consumers, banks, even pharma, so and infra. So that segment broadly is growing at about 20% plus earnings, which is quite impressive. So, but on a headline basis, looks quite high given the macro environment. So we will be looking out for potential earnings misses in this quarter. Again, primarily because the macro background has been quite weak. Not sure how much at the company level that's been baked in, but top-down estimates look quite reasonable. But again, company level there could be misses, and we seen that one of them already seen that last week in terms of Infosys. But we could see possibly more, especially in segments which are exposed to discretionary or consumer sentiment linked sectors.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.